Let's get straight to it. Everyone wants that next tech stock that could double or triple your money before the crowd catches on. The tech sector is full of hidden gems right now, and I've zeroed in on 3 companies at the core of the digital revolution. We're talking about a leader in memory innovation, a powerhouse in data storage, and a key player in semiconductor equipment. These aren't just riding the tech wave, they're enabling it. If you're serious about finding the next big winners, you'll want to stick around. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Now let's dive into the first company. First up is Micron Technology, ticker MU, a company that's quietly become one of the most important players in the AI and data center boom. While names like Nvidia and AMD often steal the spotlight, Micron is the backbone that makes their breakthroughs possible. Without Micron's memory technology, the AI revolution simply wouldn't have the horsepower it needs to run. Micron specializes in DRAM and NAND flash memory, 2 types of memory chips that are absolutely essential for everything from your smartphone and laptop to the world's most advanced data centers. Every time you open an app, stream a video, or interact with AI, there's a good chance Micron's technology is working behind the scenes. Their chips are the unsung heroes, quietly powering the digital experiences we now take for granted. The AI revolution is driving unprecedented demand for high-bandwidth memory, and Micron is at the forefront with its next-generation HBM, or high-bandwidth memory, products. These advanced chips are specifically designed to handle the massive data loads required by AI models, enabling faster training and more efficient inference. As AI models grow larger and more complex, the need for high-performance memory only intensifies, and Micron is one of the few companies capable of meeting this demand at scale. In fact, every major leap in AI capability, whether it's generative AI, natural language processing, or computer vision, relies on memory that can keep up with the relentless pace of innovation. Micron's HBM and other memory solutions are now a critical bottleneck for the entire industry. If you want to understand where AI is headed, you have to look at the companies enabling the infrastructure, not just the software. Unlike the old days of wild memory cycles, where prices and demand swung up and down unpredictably, today's demand is powered by long-term secular trends. AI, cloud computing, 5G connectivity, and autonomous vehicles are all driving a sustained need for more and better memory. These aren't passing fads, they're foundational shifts in how technology is built and used. This shift means more stable, predictable growth for Micron. Instead of riding a roller coaster of boom and bust, the company is now positioned for steady expansion as these megatrends play out over the next decade. Investors are starting to notice that Micron's business model is fundamentally changing for the better. Financials are already turning around, demand is up, prices are firming, and management is ramping up production of high-margin products. The company's focus on operational efficiency and disciplined capital spending means it can weather downturns and capitalize on upswings more effectively than ever before. In the last few quarters, we've seen a clear inflection point. Micron is moving from recovery to growth. Leadership at Micron has also been proactive, investing in new manufacturing technologies and expanding capacity to meet future demand. Their ability to anticipate industry shifts and execute on long-term strategy is a key reason why they're outpacing many competitors. The market still sees Micron as a cyclical play, but the AI supercycle could make this a structural growth story. As AI adoption accelerates across industries, from healthcare and finance to entertainment and transportation, the need for memory will only grow. Micron is uniquely positioned to benefit from this once-in-a-generation shift. As a US-based company, Micron also benefits from government support and supply chain security, adding another layer of stability. Initiatives like the CHIPS Act are designed to strengthen domestic semiconductor manufacturing, ensuring that companies like Micron have the resources and incentives to keep innovating on American soil. This not only reduces geopolitical risk, but also positions Micron as a strategic asset in the global tech race. Instead of betting on which AI software or platform will come out on top, you can own the company supplying critical memory to all of them. Whether it's OpenAI, Google, Microsoft, or a startup you've never heard of, they all need Micron's products to function at scale. This gives Micron a unique picks and shovels advantage in the AI gold rush. Micron's disciplined capital spending and relentless focus on innovation keep it ahead of rivals. The company invests billions each year in R&D, pushing the boundaries of what memory can do. From developing new chip architectures to improving energy efficiency, Micron is setting the pace for the entire industry. Their commitment to research and development isn't just about staying competitive, it's about shaping the future of technology itself. Every breakthrough in memory technology unlocks new possibilities for AI, cloud, and beyond. Even after recent gains, the stock trades at a reasonable valuation compared to its future earnings potential. Many investors still underestimate just how much growth is ahead, especially as Micron's margins improve and its product mix shifts toward higher-value solutions. Micron Technology is operating at true mega-cap scale, with a market capitalization of $321.23 billion. The stock is priced at a price-to-earnings ratio of 27.16, supported by earnings per share of 10.51. In 2024, Micron generated revenue of $25.11 billion and delivered net income of $778 million, showing profitability even as the broader memory cycle continues to swing between tight supply and bursts of demand. The risk-reward here is compelling. Micron is positioned to capture a massive share of the AI-driven memory market. As data creation explodes and AI workloads multiply, the company's addressable market is expanding faster than most people realize. In short, Micron is no longer just a cyclical bet. It's a core enabler of the AI era. With upside, the market hasn't fully priced in. The company's transformation from a commodity memory supplier to a strategic technology partner is well underway. That's why it's my top pick in the memory space. If you're looking for a way to invest in the future of AI, data, and digital infrastructure, Micron deserves a spot on your radar, and maybe even in your portfolio. Next up is Western Digital, ticker WDC, the king of long-term data storage. For decades, Western Digital has been at the heart of how the world stores its most important information, from family photos to the backbone of the internet itself. While SSDs have taken over laptops and personal devices, the real workhorses of the digital world are still hard disk drives, HDDs, cloud data centers, which power everything from your favorite streaming services to enterprise-level business applications, continue to rely on millions of Western Digital's hard drives for cost-effective, reliable storage. These massive server farms need to store petabytes, sometimes exabytes, of data, and HDDs remain the most economical way to do it at scale. The explosion of cloud data means their HDD business is healthier than most realize. Every photo uploaded, every video streamed, every document shared in the cloud adds to the insatiable demand for storage. Even as SSDs get cheaper, the sheer volume of data being generated ensures that HDDs aren't going anywhere soon. In fact, Western Digital's hard drives are quietly powering the digital transformation happening all around us. But Western Digital isn't just about spinning disks. The company is also a major player in NAND flash memory, the technology behind SSDs. These solid-state drives are the brains behind everything from lightning-fast AI servers to the latest gaming consoles and high-performance laptops. Western Digital's expertise in NAND flash means they're at the forefront of the next wave of storage innovation, enabling faster, more efficient computing for consumers and businesses alike. Their NAND flash business is a technological marvel, producing chips that can store terabytes of data in a space smaller than a postage stamp. As AI, machine learning, and big data analytics become more mainstream, the demand for high-speed, high-capacity storage is only accelerating. Western Digital is uniquely positioned to supply both the traditional HDD market and the rapidly growing SSD segment. Here's the big catalyst. Western Digital is splitting into two companies. One will focus exclusively on the tried-and-true HDD business, while the other will double down on NAND and SSDs. This isn't just a corporate reshuffling, it's a strategic move designed to unlock value and let each business pursue its own growth path without being held back by the other's challenges or capital needs. This separation will let each business shine, unlocking value the market currently overlooks. Investors will be able to choose between a stable, cash-generating HDD company and a high-growth, innovation-driven NAND SSD company. It's a classic case of the sum of the parts being worth more than the whole, and Wall Street loves these kinds of stories. The HDD side will appeal to value investors, offering steady cash flows, established customer relationships, and a dominant market position. Meanwhile, the flash business will be a pure growth play, riding the wave of AI, cloud computing, and next-gen consumer electronics. This split gives investors the flexibility to pick the flavor of tech investment that best fits their strategy. The timing couldn't be better. NAND prices, which have been in a slump, are finally recovering. At the same time, the AI revolution is driving unprecedented demand for fast, reliable storage. Western Digital's flash business is poised to benefit from both these tailwinds, setting the stage for strong growth in the years ahead. Financially, the company is making smart moves to improve its balance sheet and capital structure. They're paying down debt, optimizing operations, and positioning themselves for long-term success. This financial discipline means they'll be able to invest in innovation and weather any industry downturns with confidence. In both HDDs and NAND, Western Digital is a top-tier player with global scale and deep customer relationships. Their products are trusted by the world's biggest tech companies, cloud providers, and device makers. This scale gives them a competitive edge, allowing them to innovate faster and deliver better value to customers. The upcoming split is a classic sum-of-the-parts story, buy now, and you could benefit as the market revalues each business. Historically, these kinds of spin-offs have unlocked significant shareholder value. As investors finally get to see the true worth of each segment, Western Digital sits in a very different spot in the storage landscape, with a market capitalization of $59 billion and a price-to-earnings ratio of 24.26, alongside earnings per share of 7.10. But the income statement tells the key story here. In 2024, revenue came in at $6.31 billion, while net income was negative $852 million. That contrast highlights a business that can post solid per-share earnings metrics while still battling profitability pressures, restructuring impacts, or cyclical headwinds depending on the period being measured. Of course, risks remain. The tech industry is notoriously cyclical, and competition is fierce. But the upside from the spin-off, combined with industry tailwinds like AI and cloud growth, is substantial. If Western Digital executes well, the rewards could be significant. Western Digital is a turnaround story, a recovery play, and a corporate catalyst all rolled into one. It's rare to find a company with this much potential for both stability and explosive growth, especially at a time when the world's appetite for data is only increasing. That's why Western Digital is my second pick for tech stocks, set to outperform by 2026. With a powerful legacy, a bold new strategy, and a front-row seat to the data revolution, Western Digital is a name every tech investor should have on their radar. For my final pick, let's move up the semiconductor supply chain to a company that doesn't always make headlines, but plays a crucial role in the world of advanced technology, ACM Research, ticker ACMR. This is a specialist in wafer cleaning equipment, a niche but absolutely vital segment for chip manufacturing. While most people focus on the big names designing chips or running foundries, it's companies like ACM that quietly enable the entire industry to function at the cutting edge. In the world of chip making, the stakes are incredibly high. Even a single microscopic particle, something invisible to the naked eye, can ruin an entire wafer, costing millions of dollars in lost product and wasted effort. That's why ACM's advanced cleaning technology is so essential, especially as chips become smaller and more complex. Their systems are designed to remove even the tiniest contaminants, ensuring that every chip meets the highest standards of quality and reliability. As the industry pushes toward ever smaller nodes and more intricate architectures, the need for ultra-precise cleaning only grows. ACM's proprietary tools are considered best in class by many in the industry. Their unique approach combines advanced chemistry, precision engineering, and automation, making them a critical enabler for the entire semiconductor ecosystem. Without companies like ACM, the dream of mass-producing next-generation chips simply wouldn't be possible. Their equipment is used by some of the world's most advanced fabs, and their reputation for reliability and innovation is growing rapidly. ACM's main market is China, which is currently pouring billions of dollars into building up its domestic chip fabrication capabilities. The Chinese government has made semiconductor self-sufficiency a top priority, and that's driving explosive demand for companies like ACM. As new fabs spring up across the country, ACM's cleaning equipment is becoming a standard fixture, giving the company a front-row seat to one of the fastest-growing markets in the world. The numbers tell the story. ACM has posted rapid revenue growth over the past several years, outpacing many of its peers. Yet despite this impressive performance, the stock currently trades at a steep discount. The main reason, ongoing tensions between the US and China have cast a shadow over the entire sector, leading many investors to overlook ACM's underlying strength and growth potential. It's important to note, however, that ACM's products aren't the main target of current export controls. While some high-end chip-making tools face restrictions, ACM's cleaning systems remain in high demand. In fact, as Chinese fabs look to reduce their reliance on foreign suppliers, they're increasingly turning to local champions like ACM. This shift is creating a powerful tailwind for the company, insulating it from some of the geopolitical risks that have hurt others in the space. But ACM isn't content to rest on its laurels or rely solely on the Chinese market. The company is aggressively expanding its global footprint, building a state-of-the-art R&D center in Oregon, and actively targeting new customers in the United States and Europe. This move is about more than just diversification. It's a strategic bet on the future of the semiconductor industry, which is becoming increasingly global and interconnected. If ACM can land a major Western client, think one of the big US or European chipmakers, it could be a true game changer for the stock. Such a partnership would not only validate ACM's technology on the world stage, but also open the door to a massive new pool of customers. It would signal to the market that ACM is more than just a regional player. It's a global contender in a critical segment of the chip supply chain. Right now, the market is pricing in a worst-case scenario when it comes to geopolitical risk. But if you look at ACM's actual results, its growth, its expanding customer base, its push into new markets, the story is much more optimistic. The company is executing on all fronts, and its diversification strategy is starting to pay off. For investors who can see past the headlines, there's a compelling case to be made for ACM's long-term potential. As global demand for chips continues to soar, every new fab that gets built will need advanced cleaning equipment. This is not a nice-to-have, it's a must-have for any company hoping to produce high-yield, high-performance chips. ACM is perfectly positioned to capture a growing share of this market, especially as more countries invest in domestic chip production and look for reliable, innovative suppliers. Beyond its core cleaning systems, ACM is also expanding into new product areas, such as advanced wet processing and packaging solutions. These innovations further increase the company's addressable market and deepen its relationships with key customers. By continually investing in R&D and staying ahead of industry trends, ACM is ensuring that it remains indispensable to the world's leading chipmakers. What's especially impressive is that ACM remains founder-led and deeply innovation-driven. The leadership team has a clear vision for global growth, and they're executing on that strategy with discipline and ambition. Their ability to adapt to changing market conditions, invest in new technologies, and build strong relationships with customers sets them apart from many competitors. ACM Research is the smaller, more specialized semiconductor equipment player in this group. With a market capitalization of $2.55 billion, it trades at a price-to-earnings ratio of 22.94 and reports earnings per share of 1.72. In 2024, ACM Research posted revenue of $782.11 million and net income of $103.62 million, reflecting a business that is operating profitably at a much smaller scale, where execution and continued customer adoption can meaningfully move the needle year to year. For investors willing to stomach some volatility, the upside here is huge. This is a high-growth company trading at a value price with multiple catalysts on the horizon. If ACM can continue to grow its market share, expand internationally, and perhaps even secure a major Western client, the stock could see significant appreciation in the years ahead. In summary, ACM Research is a hidden gem in the semiconductor world, overlooked by many due to geopolitical fears, but with the potential to double or even triple as the market catches up to its true value. For those looking for a unique way to play the ongoing chip boom, ACM offers a rare combination of growth, innovation, and value. Keep an eye on this one. It might just be the breakout story of the next semiconductor cycle. So, there you have it. 3 tech stocks uniquely positioned for outperformance. Micron, Western Digital, and ACM Research. Each has a clear catalyst, AI-driven demand, a corporate spin-off, or a massive valuation disconnect. Want more in-depth analysis and real-time alerts? Join our Stocks Galore Patreon community. Link in the description. Now, I want to hear from you. Which of these stocks do you think has the most potential by 2026, and why? Drop your thoughts in the comments. Don't forget to like, subscribe, and stay tuned for the next big investing update. Thanks for watching.